how do you qualify for a private mortgage? So there are 3 things to consider. Number 1, location, location, location. If you are in a very standard house in a subdivision in a very populated area, very likely you'll be able to get a private mortgage as long as there's enough equity. One private lender kind of put it this way: as long as you have neighbors on both sides, I'll lend. For rural property, it's definitely harder to get a private mortgage. There are some lenders we do work with for rural and farm properties, but for the most part, property needs to be located in a marketable community. Number 2 is down payment. Most private lenders need at least 20% down payment on home equities. If you're buying a $1 million property, you have to have about $200K down payment. If you're refinancing your property, you can refinance up to 80% of your fair market value of your home. That is a very general rule of thumb. We work with private mortgage lenders who are really flexible and focus on whether the story makes sense, right? So in the past, we've lent up to 90% of the home value before. We really love lending to first-time home buyers or someone with strong income and credit, but somehow they just got turned away by the bank last minute. A lot of our investors will consider it. On the other hand, for some of the more rural properties, oftentimes investors need higher down payment. It's up to 30 to 35%, depends on the location, right? Location and the down payment, they're almost 2 factors who's mitigating each other, right? So you have a fantastic location, then you don't need that much down payment. If your location is not so great and is pretty unique, then you need a little bit higher down payment. The third factor, which in my mind is the most important one, is the exit strategy, because a private mortgage is only intended for short term. It's band-aid financing. I always tell my agents, I always tell my team, so this is our philosophy, right? If we don't think we can get you out of the private mortgage in the next 12 to 24 months, we wouldn't put you into a private mortgage in the first place. That's not right. You have an exit plan to help you get out of this private mortgage within a short term. The shorter, the better. So extremely short-term private mortgage is a bridge loan. Sometimes people just need it for 2 months, 3 months. We've done one that's just for 3 weeks. You just need it to close the property that you buy while waiting for your existing property to sell, right? In the beginning of the video, I mentioned my own example is that I needed to wait 6 months for myself to have at least 6 months of demonstrated positive cash flow of my business. I knew pretty certain that I could qualify for a bank mortgage within 6 months. So that's where I got a private mortgage, and I got in and got out within 6 months. 12-month example would be many borrowers who had some credit issues, their credit score in the 500s, and that obviously wouldn't qualify for a bank mortgage. We helped them bought their homes with a private mortgage, and then after a year, their credit score increased to 650, 680. We're able to quickly refi them into a bank mortgage. They're paying like thousands of dollars for credit card debt, payday loans. And we were able to get private mortgages to help them clean up their credit. And once their credit is up, we moved them to a bank and refinanced and paid our private investors out. So bank refinance is one exit strategy. The other exit strategy is many people, they plan to sell the property, but they need the money to renovate. Renovation can help you sell your house at a much bigger premium. You can spend $50K on kitchen, bathroom and sell it for $100K more. And that's where we know the clients borrowing the money to renovate. They have the plan to sell the house in 12 months time. So this year, the property market has definitely come down quite a bit. People, they are downsizing, right? So they've found a good deal. They found a great property that's a few $100,000 cheaper than what they were looking at a couple months ago. So they want to buy that property first. They didn't want to sell their current property yet. They think they'll be able to sell it at a better price next year, right? So we've seen people borrowing private mortgage to buy the property they'll downsize into while waiting for their current property to sell. I hope today's video gave you a pretty good overview on what private mortgages are. When does it make sense to borrow private mortgages, how to get qualified. If you're not sure whether private mortgages are right options for you or how to qualify, give us a call at 888-978-4984 or visit us at effortlessmortgage.ca. All of our mortgage advisors are salary-based. We have helped a lot of happy customers. I hope our 5-star reviews on Google speak for themselves. So if you like the video, give us a follow, hit subscribe for more home and financing tips. That's it for today, guys. Until next time.